Hi, everyone. We are starting the next session. It's going to be a great one, this one. We are very fortunate to have Phil Venables. He's the Chief Information Security Officer at Google, and he had the same position at Goldman Sachs for 17 years and also became Chief Operating Risk Officer at Goldman Sachs and served on the board of directors at Goldman Sachs. He's with Google now, and his fireside chat will be moderated by Professor Patricia from Columbia University, and she's one of the organizing partners for this conference. Trish was at the New York Fed for about 20 years. She's an expert on monetary policy, but also has been working deeply understanding this cyber risk and financial stability. So it's thank you very much for being with us. And also, if you don't know, the QR code outside has all the information about the agenda and speakers' bios. That's why the full bio is in the booklet.
Thank you, Jalapa. So afternoon, everybody. It's a real pleasure to be here in person, yay. It's always great to give a little help to Jalapa in organizing this conference, since she's really the force behind it all. So it's a real pleasure to get a chance to talk to Phil again. He was kind enough when he was at Goldman Sachs to come and speak at a conference. It was in person, so it must have been pre-COVID. At Columbia on operational risk. So let me start, Phil, by asking you for your thoughts about the risks associated with this ongoing, incredibly rapid movement of financial industry, data, analytics, et cetera, into the cloud. I know this is something you've seen from both sides, from Goldman and in your current position at Google. And if I can be a little bit more specific, what's your take on the current status of cloud provider security? And in particular, now I'll put my financial stability hat on for a minute, say what I'll call the, quote, trade-off between greater day-to-day security and reducing day-to-day risk, but potentially increasing tail risks because so much data and information, frankly, for just a huge chunk of the financial industry is pretty concentrated in a small number of companies.
Yeah, so first of all, I should clarify, I'm the Chief Information Security Officer for Google Cloud. Thankfully, there's only so much pain I can take in my role. I don't cover the consumer side of Google. So in my role, I cover cloud and actually a fair bit of some consumer stuff in Google Workspace, and then I cover risk, compliance, privacy, resilience, security. So it's reasonably well spread. But in particular to your question, because in our cloud business, we see a lot of this, and I would say, at the moment, and this has been a change over the last few years. I think many organizations in all critical infrastructure sectors, but particularly in finance and all geographies, have really started to see the cloud as being something that they can use to manage and mitigate their operating risks, as opposed to a few years ago, it was seen as a risk in itself to be managed. And so I think there's been a few changes that have caused this. It's not just that people have got more comfortable with the concept of cloud, although they have. It really is over the past, I would say, 5+ years, but especially in the past few years, the security levels of at least the leading so-called hyperscale cloud providers like us has increased dramatically. It was already quite high where security was built in and not necessarily bolted on after the fact, but it's kept increasing. The other thing that I think has changed quite a bit is the resiliency levels have increased, and in particular as well, and this is important, is the compliance levels have increased, the ability to demonstrate, particularly for regulated industries, how the cloud can be used in a way that meets the operational risk and security and other compliance standards of institutions. So really there's been a big shift in that people genuinely see this now as a means of uplifting their controls and resilience and security by moving to the cloud. I think in parallel to that as well, and this is especially for smaller organizations or even the kind of the digital parts of larger financial institutions are finding it more cost effective to go straight to the cloud because everything's built in by default, and they're able to scale without necessarily having to build large capital outlay physical investments in traditional data centers. The other thing that I think has gone on as well is that, and I'm happy to take questions as we go along if some of you violently disagree with this, but I would say regulators in various forms around the world, and examination teams and on-site teams, people are getting more comfortable with the concept and are getting more comfortable with the kind of generally accepted principles of how to run these things. The one thing I would say, though, and you kind of touched on this, is not all cloud providers and service providers are created equal. And so it's very, very important still for regulators, for large enterprises and small enterprises, to really kind of make sure they understand who they're doing business with and the controls that the providers they're evaluating are actually effective. I think generally speaking, as I said, the hyperscale cloud providers are generally quite good. Some of the big SaaS companies are generally quite good, but there's a pretty long tail of other companies out there that probably haven't yet invested enough in security, and so you just can't assume those things. These things have to be verified. And to your final question about the kind of the buildup of risk in cloud providers, the way I look at this is I tend to think of cloud as it's basically cloud is a risk transformation engine that moves things from the expected loss, the front of the loss curve, into the tail, in the sense that, again, you pick on resilience. So most organizations that appropriately use the resilience built into the cloud, in other words, if they architect their systems to use multiple zones, multiple regions, they're going to get a much higher level of resilience than they will typically be able to afford, unless they're the very largest of banks that have 30, 40 global data centers. They're going to get a higher level of resilience out of the cloud. But, over time, more and more of the industry builds up its use in, again, probably the big three, arguably maybe 5 or 6 of the large cloud providers. And so all cloud providers are working very, very hard to keep pushing those broad risks down into the tail, and not just continuing to reduce the likelihood, but also planning and managing for the very unlikely event where there is a broader than a zone failure, to make sure that the recovery happens quicker. And, again, we can probably talk later about, how we also need to think about the appropriate use of multi-cloud, particularly for very systemic activities. So I think, generally speaking, resilience and security goes up in the cloud, but you don't get anything for free. You've got to make sure you architect and use it in the appropriate way, and migrate your legacy onto the cloud to take advantage of that.
So I shouldn't set this down. So you mentioned resiliency. So how, and thinking about what to do if something happens, a tail event happens. So what are your thoughts about at least some of the things that are being discussed here? Things like interoperability. So not just moving from, one center to another within the same provider, but across cloud providers, standard settings. And if not full interoperability, then at least sort of standard setting. I know there's a certain amount of regulatory discussion about that, but I'm sort of curious as to, from inside, what are your views about what's possible and what's likely?
Yeah, I mean, so I think, again, you've got to be careful with this, because there are, like with any use of any vendor historically, there's always some very proprietary things that you want to take advantage of a particular vendor. And so organizations are still going to have to make a choice as to whether they're trading off the ability to move work between vendors versus the particular feature that they want to exploit that is only in one vendor. So I think everybody has to choose. It's a classic kind of risk portfolio decision. Is, are you going to focus all your activity on one vendor because you get some unique advantage from that, versus are you going to take something that's sufficiently critical for you such that you want to spread it across multiple cloud providers? I think in that latter case, that, exactly to your point, the need for workload portability and data portability is very important. So making sure that when you've got that multi-cloud requirement, that you're able to rely on a cloud provider that commits to open standards, open source, and a set of tooling that provides customers with the capability to actually move things across clouds. This is like very, very achievable today. But I'll say there are some companies out there that claim to stand behind open standards and actually don't in reality, and people find that out when they try and do their experiments to move workloads across multi-clouds. We're very, very, I'm trying to not make this kind of an advert for what we do, but I think we've been quite public in our commitment to open standards and open source and to multi-cloud portability. Largely because we don't see we want people to be able to choose to run on our platform, not to be locked into the platform, and a big part of that is to be able to stand behind open source and open standards. And I think for the community overall, I used to say the same thing in my last role on the other side of the fence is we have to be committed to open source and open standards, because that's the way we're going to get portability, not just of workload but portability of data. And I think another big part of this is what we've always described as digital sovereignty, which in some cases comes up a lot in the context of things like data residency inside the EU and some other countries. But increasingly, we kind of think of sovereignty as even if you're running in the cloud, we still believe customers should have control of where their workload is, where their data is, and then ultimately something we call software sovereignty, which is the ability to take the software that they've developed, again, if it's adherent to open standards and typically open source, that you would then be able to go run that somewhere else. So your software is sovereign to you and not captured in a particular cloud. So again, multi-cloud and portability is going to be key to a lot of how we think about the resiliency frameworks going forward.
And almost a requirement given the data restrictions, the sort of ring fencing in terms of data. So in a lot of jurisdictions, which is on the rise, obviously, as everybody knows. So little step back about a little more big picture about cloud. So what's the sort of near-term state of play for cloud services, sort of growth, the various providers, comparative advantages, kind of what's going on now and in the sort of near term? I'll get to the future in a minute.
Yeah, I mean, I think we're at the very beginning of the transition to cloud in my view. I mean, some days it doesn't feel like that when all people really talk about is cloud, but I think, I'm constantly reminded that while there's a lot of companies that are so-called digitally native, that they were built or they did an early migration to the cloud, and there's many pockets of financial institutions, large and small worldwide, that are in effect digitally native themselves. But as this audience here and online will know more than most audiences, there's a very big kind of tail of things that are still in corporate data centers, that still have to be need to kind of transition to the cloud over time as part of those companies' modernization of their technology. And I think a lot of the cloud providers are increasingly supporting that, and increasingly supporting doing that with a mind to managing the operating risk of that transition. So we don't have hard and fast numbers, but because it's really hard to kind of measure these things. But I would say, we're still probably of the order of between kind of 10 and 20% is in the cloud. There's still the vast majority of corporate IT is still locked up in various forms of data centers. And a big part of this is not just about moving data centers to the cloud. In many cases, most of the people we work with, it's using the cloud or a more modern IT platform to just transform the way they're operating, the functionality, the agility, the way they develop software, as well as security, resilience, and all of the compliance techniques. So I think once you start getting into those older systems, they don't move as quickly because in many cases they need to be adjusted and re-architected for migration. But I would say again, a lot of the cloud providers are providing more and more tools to customers to facilitate that. So I think we're going to continue to see an accelerating pace of how that remainder of what is in corporate data centers moving to the cloud over time. And I think that's that's generally going to be healthy for a lot of security, given that the security built into the cloud is typically higher than what has been built up in on-premise legacy deployments over many years, like we talked about before.
So that's interesting. And I have to ask this question. Your move from the financial industry to the technology industry is actually only one of several recent similar moves of senior financial executives moving from finance into tech, into big tech in this case. Is that a reflection of the current state of the cloud business or the near-term state, or does it signal kind of greater interest on the technology companies, big tech companies, tipping their toes into finance more than they have already, or a little of both?
Well, I can't speak for other companies that may choose to compete with their customers, but for us, it's this is really all about talent, and this is not a veiled pat on the back for me. It's just kind of a general comment that when you think about the competitive edge that tech companies have to have, it's almost by definition the fact that they have to have great engineering talent and other talent in their organizations. It's kind of kudos to the financial industry, really, that probably outside of big tech, finance has the biggest, one of the biggest concentrations of skilled technologists and skilled kind of engineering workforces. And so as tech looks to bring on even more capability, then one of the places to go has been finance, where there's quite a high degree of skilled engineering leadership at many levels in organizations. And so I think that's one of the main reasons why you see that. The other thing as well, and this is something where we've especially focused on, is, again, it's back to that challenge of where we can be most helpful to customers in how they move things to the cloud or build things in the cloud, is to actually have those customers working with people like me who've kind of sat in their seat for the longest time. So it's funny, we actually built an organization we call our office, imaginatively, we call our office of the CISO. It's basically a fairly large and growing team of former chief information security officers and other security leaders that have had those jobs in healthcare, finance, energy, telecom, public sector. They've had those jobs in different countries. And basically their job is to just work with our customers, the risk leaders, the compliance leaders, the security leaders, the IT and business leaders, and actually kind of have empathy for their challenges of managing these migrations and managing these builds and managing these transformations, and really kind of taking their perspective. And almost by definition, when we build teams like that, and it's not just in my organization, we have it in our engineering functions, our product teams, our various other teams. We have to go to industry to pull those people in, to have those skills, to understand those industry verticals, to then actually partner with those customers. And it actually works really well, because everybody wants to work with somebody that's lived their pain and can actually help them through some of these things in practical ways. Yeah.
So this sounds like a non sequitur, but I actually think it is related. The trade-off between transparency and privacy is a massively age-old issue in finance. There's absolutely nothing new about the basic problem. How do you see the cloud and the technology solutions helping firms, financial firms, manage that balance, and particularly in a world that's increasingly digital, and as we both mentioned a minute ago, increasingly balkanized in terms of information?
Yeah, I mean, one of the, I'll talk about kind of privacy more generally first before kind of transparency versus privacy is we're seeing, around the world, more and more rules being put in place that restrict and confine data within national boundaries, or in some cases jurisdictional boundaries, like the whole EU. There's various reasons for that. Some of it's to do with privacy. There's potentially lots of other reasons why those laws come into effect. One of the things that's interesting is we actually have, again, all cloud providers, I think, have done a lot of work to give customers the ability to directly specify where their data should geographically reside even in the cloud. I mean, so as you all know, the cloud's not this amorphous thing. This cloud is just a big mass of data centers that we run and operate around the world in various different countries. Now, the good news is from a data residency perspective, driven from privacy perspectives, for a lot of even large banks over the past decades or so, everybody's done these kind of regional data center consolidations. So they went from a world of having data centers in every country to having a small number of larger scale regionalized data centers. And now with a bunch of data residency rules, they have to think about, well, I don't have a data center in that country anymore. My data centers run out of this kind of big regional complex. So they now have to think about putting things back. And in many cases, they're coming to cloud providers like us that have the geographic spread and have the ability to be able to confine data and operations to a particular geographic boundary. And so if anything, I think people are looking at cloud as being a means to manage privacy. But it is difficult. I mean, there are trade-offs in this, in the sense that some organizations, for some other reasons, want to be able to spread data more globally, but the rules they have to operate in have them confine it. And we help them with that. There's various techniques with encryption and other things where we can kind of manage a trade-off between that. And then in terms of, again, I'm probably, used to deal with this in my old job, but I'm probably no longer qualified to go into depth between the trade-off between certain rules and regulations that would dictate privacy, and then the certain rules and regulations that would dictate pooling of data across national boundaries for types of transparency and reporting and other obligations. The one thing I'd say, though, is there's a lot of new technology coming around differential privacy and multi-party computation and some of the other things that, while you could operate them outside of cloud, they're a lot more effective inside a cloud provider because of the scale, where you can start to do things with data in ways that you couldn't before, getting the effect of pooling data without compromising on any of the privacy. And there's certainly a lot of interesting work going on that helps you do those trade-offs.
So that actually is a great lead-in. Thank you. to my next question, which is kind of even more. I'm going to anticipate the last panel of the day, which is even more forward-looking and more future. So get your views about this. So what's next? AI, quantum computing, digital, whatever, assets, money, public, private, so forth and so on. So what are you thinking about, particularly a little further out in terms of the future?
No, I think this is an absolutely fantastic time to be in and around technology, not just because I'm an engineer by profession, so I think just technology is naturally cool. But it's even better than, in my view, than what was going on during the initial internet revolution, because in this wave of technologies, the direct applicability to society changing level capabilities are there. When you look at what we're all able to do with machine learning in the context of AI and where that is going, and occasionally people talk about have we reached the limit of what things are available, and then you start looking at some of the new innovations that are happening both in the algorithms and the ability and the scale of the hardware to train new models that unleashes new capability. And I think just we're still at the very beginning, I think, of what we can do with the latest AI capabilities. You look at what's going to come with quantum, and again, it's debatable. Lots of people have very different opinions of when we'll see a large-scale quantum computer becoming available. But the way I tend to think about this is it's no longer a physics problem; it's an engineering problem. And as we've seen over the past few decades, when things are kind of quote unquote just engineering problems, we're often surprised about how quickly engineers will solve engineering problems once it's out of the domain of physics into engineering. So I think we should be prepared to be surprised on the upside about the availability and capability of quantum. And again, this is not just quantum computing. When you start looking across quantum sensing and other application of quantum technologies, it's going to have transformational effects on many different things, from medicine through to defense, through to kind of mapping and other types of technologies. And then just kind of in this space with digital finance, I'm not going to get into kind of the cryptocurrency debate, but one thing I will say that for me at least in my mind, is a certainty, is the inevitability of programmable financial instruments. However you choose to pick the underlying technology for that, I think when you look across the world, everything that is happening is we're constructing digital twins for physical reality and getting increasing advantage out of that. And even though kind of finance is kind of naturally ephemeral, you can think about, any kind of financial instrument should have a digital analog to it to permit us to do different things with it. The only thing I would say is that I think everybody in, the space I work in, whether it's security or compliance or privacy or risk, and in the increasing space of kind of ethics of technology and AIs, we're increasingly focused on making sure all of these things get done in a safe way, where safe means various different things. And I think we have to proceed at pace with innovation, because I think the benefits are absolutely worth it. But I think collectively, from tech companies to customers to regulators to public policy, we're going to have to keep working on what's the appropriate frameworks for doing all of this in a safe way, because everything's dual use, and there's a lot of upside, but if we don't manage it in the appropriately safe way, there could be some downside as well.
Thank you. I'm looking at my watch now and realizing that we're going to run out of time. So why don't I open it up and start to take questions from the audience for Phil. A couple.
Thank you. I'll be very quick. My question, thanks for this conversation. My question is, what are ways that the provision of cloud services globally could be framed or understood as a geopolitical issue or national security issue? And I don't just mean like just cybersecurity, but just as a geopolitical and broader national security issue.
Yeah, I mean, I think this is, again, a little bit tied up, and this may not exactly get to your question, but I think it'll be illustrative, is, one of the things we find, again, this has been particularly in the EU, but will come in other regions as well, where stipulations for their own national critical infrastructure, for it to run on cloud infrastructure in their countries that are beyond the reach of accessibility from other countries' jurisdictions. So that's that's one dimension to the data control. The way we've solved that, or in the process of solving it, is something. And again, I'm trying to not make this a sales pitch. I'm just using this for illustration. We've created this concept we call trusted partner cloud, and basically what we do in many European countries is the initial thing. So in France, for example, we partner with Thales. In Germany, it's with T-Systems, where we carve off a set of zones inside Google data centers, and those partners basically operate those segments of those data centers. We carve up our cryptographic infrastructure, so one side can't get to the other side. We push software into that partner managed cloud, so it retains functional equivalence, so they're not getting a second class cloud, but the partner controls that. So for example, if we were to try and get access to that data, we couldn't, and so any kind of request for data would have to go through that local IT company that would be under that national government control and those national government rules around kind of lawful access to data. So we think we've kind of found an interesting solution to that balance between the need for a global cloud to be able to move workloads and data around in appropriate ways, the need for consistency of functionality everywhere, but also the need for sovereignty and national control under managed IT providers under that country's jurisdiction. So we think that's going to be an increasingly effective model for balancing this. Right.
Other questions?
Hi, my question was just around what are the categories of threats and vulnerabilities, specific to the financial firm sector that you're dealing with that are, keeping you and your clients, more awake at night these days and looking ahead?
Yeah, I would say that there's no there's no one thing, as you might expect. I mean, every organization has its own different mix of risks. I think there's a few ways of looking at this. I mean, I think there's a dominant risk in the industry at the moment around ransomware that you'll have all seen in headlines. A lot of financial institutions, have figured out ways of defending against that, more so than I would say a lot of other industries. The reason I got to bring up the topic of ransomware, though, is one of the things we regularly deal with is interacting with some organizations that say, yeah, we've got backups, we're all great, ransomware is not a problem for us, and then the very next week they have a ransomware event and they find out their backups weren't working as effectively as they thought they would. So the advice we regularly give to everybody, not just our customers, is not just to test your backups in the way that they're traditionally tested, like, you bring back a file and one of the files comes back and you go, great, but is to actually simulate the recovery of your environment from backups. I kind of like to think about this, everybody should have an experiment of thinking, how do you reboot your company? So literally, if, a business unit or a set of systems, if you literally had just a bunch of blank cloud instances or bare metal, and then a bunch of tapes over in the corner, can you really restart your company from there? And a lot of companies find that when they truly test their backups like that, they find that they're missing some software from the backups that they need to do the recovery. They're missing the indexes that they need to do the recovery. They've got all the data there, but the data is hard to actually redeploy into an environment. And so a common theme we often encounter, and this is not just on ransomware, it could be other events, is to truly test to the scenario that you're defending against, as opposed to testing the thing that you first created those controls for like 5 years ago. Right.
Other questions?
You mentioned that we're in the first few years or first few decades of the cloud growth story. With the increased needs of machine learning and the increase of edge compute, how do you see edge compute changing the narrative for the growth of cloud?
Yeah, I mean, it's an interesting question. So, we deploy a lot of edge capability, around different telecoms needs and different local needs. And so, we also have increasing capabilities. We have a thing we call Google Distributed Cloud, where increasingly you can take a slice of our cloud software on certified hardware that we deploy into other people's data centers, and there's a bunch of reasons for that. Sometimes it's to do with kind of isolation and security. More often than not, it's to do with kind of communications performance of being close to, by definition, the edge of things. Increasingly as well, we're also taking our own software and services and we can deploy them on premise to customers. We actually have some software, part of our infrastructure, that we can deploy into other people's clouds. It's one of the fun parts of my job is thinking about how do we security test our deployments on the other clouds. And so, there's a lot of that. So I think cloud is moving from just being the cloud data centers to it being more of this distributed concept that appears everywhere, and I think it's gonna continue to be that. And it's to the premise of your question, that's one of the things that keeps enabling more workloads to not just move to the cloud, but move to the cloud-like software that permits this IT modernization, that permits this increased agility, security, and resiliency. And then people can choose whether it goes in the main cloud or in a kind of an edge node or even in an on-premise environment using the same software construct. I think gives people tremendous advantage. Yeah.
Another question?
Yeah, just quickly, a little bit of a simple question, but you said earlier, I think it was like 10 to 20% of the corporate financial world is still not cloud, and I would argue in some subsectors of that, like banks, it's probably even lower. It's probably like 5%. So I'm just curious, what do you think some of the holdups are to greater cloud adoption? Is availability of vendors and tech providers? Is it understanding of financial firm stakeholders, executives, regulators, and what the risks are? Just curious your thoughts.
Yeah, I mean, I think it's a combination of those things you kind of listed off. I mean, I think I think banks have been building new in the cloud. They've also been using particular cloud solutions. So a lot of banks have moved kind of data analytics and machine learning workloads to the cloud, where there's just a clear advantage compared to what they have on premise. I think, when you start looking through all of the internal bank systems, there's a lot of things that they would like to move, but they require a degree of work to re-architect them a little bit to be able to operate effectively and take advantage of the cloud. I think up until recent years, a lot of the providers have not provided enough tools to help those customers figure out how to do that migration. That's happening more now, and so there's more tools for the migration to happen. I think the other thing as well is just as the natural thing is all of this takes work to do, and when companies are under competitive pressure to do more things, they're always making that trade-off between, is this the year I just kind of add that extra functionality to that thing that's been running on that mainframe for 20 years, or is this the year I actually now bite the bullet and do the migration and tap into all of the things I'm going to be able to do on the cloud? A lot of companies are making those decisions now, and again, a lot of companies are figuring out ways to migrate in a hybrid sense, that they move some things to the cloud systems call back to their on-premise environment, they're deploying things over the top of their on-premise environment that get them ready for a cloud movement. So there's a lot more of these kind of migration technologies, and I think, to be fair, the cloud providers have now in the past few years done a lot more where we're helping customers managing the operating risk of running in those hybrid modes where they're doing a gradual migration. So I think we're going to see it accelerate more now. There's more tools and capability, and again, to the point of your question, much more kind of breadth and depth in skill sets in the bank IT teams about how to do this with multiple cloud providers. So I think it's gradually going to pick up now.
And what convenient timing, we just got a stop sign. And I didn't get to ask my question about cybersecurity, which is really too bad. But we are out of time. Thank you, Phil. That was great.
It's a pleasure. Thank you.